this video, I'm going to show you the exact strategy I use to make money every day trading in just 10 minutes to 1 hour. I am currently increasing my win rate from 60% up to 80% using these exact confluences. And I'm going to show you how it all works, whether you're taking a long or a short in this video. So be sure to stay to the end. Let's get started. Today, I'm going to show you these trades I took, a long and a short, so you can see it in both directions and really know what to look at to capitalize off these trades. A lot of times people will get screwed on reversals on these, but I found a secret confluence I'd like to share with you on the hourly time frame, so you know when a reversal is coming in case you're going with the trend. So we are actually going to start off with the long today, and this was a trade I actually took last week. This trade happened during the New York market open, so that would be around 8:30 a.m. Central my time. At 8 a.m. Central, I usually plan on hopping in on the charts and doing a quick top-down analysis to see where we're headed at for the day. But usually what I start out with before scalping on the 5-minute or 1-minute time frame is we're going to hop to the daily chart. And I'm going to show you this step-by-step walkthrough so you can easily follow this trading strategy using your own guidelines. So the first thing you're going to do when you hop on the charts in the morning, like I said, this is for New York market open. However, you could use it for Asia's open, which is 8:30 p.m. Central my time, or London's open. You can look that time up as well. I'm usually sleeping, but I have heard this strategy works during pretty much any market open here. So if you move to the daily time frame here, but we're going to start out by marking the previous day high and low candle here. So we are on the daily chart. This was on April 24th when I took this trade. So the previous day would have been April 23rd. So I just marked this out top to bottom, and I'll just mark this in white lines so you guys can see it clearly. So this is the previous day high, and this is the previous day low here. Okay. So now that we know that, we can gauge a general trend or area where the market's going to head. The next step I do, and this is very important, is move down to the hourly, because you're going to want to see if there is a divergence there. So if there is a divergence, I usually realize it could be a good indication that we could be headed for a reversal. So normally when I am trading, I obviously like to go in the direction of the trend. So we are in longs. It seems like we should be looking for a long today. However, we're going to check and make sure we're not headed for a complete reversal or anything like that. It does look like it already made its reversal here. We had this bear divergence here. So here to here. And you can see that divergence on the RSI. And this is the RSI indicator down here. You can just type this in up here, relative strength index, and it'll just pop up for you when you click it. You can change the colors or do whatever you want here. I do have specific settings I use for this. So as you can see, I'll pull them up here. I use a RSI length of 7. I have source on close, SMA, length is 3, BB is 3, and all these you leave the same. And then whatever colors you want to put, you can. But it does look like we should be looking for longs today on the hourly and the daily time frame. And the reason for this is we don't really have a divergence right here. This is moving in the correct direction. So we have this correct direction, no divergence. Unlike this area we saw up here with this bear, we got a trend downward on the hourly. And when you hop to the 5-minute or 1-minute, this is going to be a lot of shorts all in one place that you can take. So we also had resistance on this previous day low. So this was the candle we took here, where we marked that previous day low and high on that candle. So here's the previous day low, previous day high. It looks like it's attempting to reach for that previous day high and maybe break through that. I guess we will see. But this is why I would be looking for longs on this day. And usually during the opening sessions, I'm only looking for about 1 to 3 trades today. Usually it's 1 to 2, so that's the typical standard. You can go about your day and trade the rest of the trend sometimes, but usually I'm just trading the market open because I have other things to do with my day. So here's the bear. And then the next step is, now that we realize that there's no divergence, so I don't think we're expecting a reversal for shorts here, we have a general uptrend. We can go ahead and move to the 5 minute, and we're going to mark the opening range breakout, which is the first 5 minute candle. So that 8:30 a.m. Central Time. So I'm not sure what time zone you're in, but make sure you're in the correct time zone. I am Central, but 8:30 a.m. to 8:35 a.m. candle. So we will go see. We are at 8:10 right now. I'm just going to speed this up here. A little too far. So that would be this general candle right here. So as you can see, we have this candle. Just mark this. Purple lines. And this is our 5 minute opening range breakout. The top, the high, and here's the low on this candle here, 8:30 to 8:35 a.m. So we're going to mark that area. And what we're looking for is either a break to the upside or a break to the downside. Now, since we already determined there's no divergence on the hourly, it's reaching towards the top. It held this resistance, this white line here, this previous day low here. We can assume, I would assume it would probably be reaching for this top line at least to try to reach that take profit level. So next, we are going to go ahead. I'm going to assume it's going to break through. But what you want to do for this strategy, if you want to keep the strategy super simple, you would look for a break past this purple line to the downside or a break to the upside for enter. And what we're going to do is we're going to look for entry at a retest of this purple line here for a 2-to-1 risk reward. So I'm going to show you some better take profit levels here though. Let's go ahead and play this forward. We'll just make sure on the 1 minute we mark those 5 candles, 8:30 a.m. to 8:35 a.m. So here's 8:30, 1, 2, 3, 4, 5. So those 5 candles, that's the top, that's the low. Now let's wait for a break to the upside or downside here. So now we do have a break to the downside, and this is very important. This is why exactly I wanted to film this trade with you guys. Although this appears to be a good trade, we have a lot of bullish momentum. This is why I wouldn't take a short here. One, because we did not see a divergence on the hourly. It looked like we were going in an upward direction. It looked like on the daily, we were also reaching for that previous day high mark. We held resistance at this previous day low mark, as you can see here. And now it's just ranging back upwards. So this is why I'm very careful to always go with the trend. But you'll see as well, even though we had this big break to the downside, let's say you even marketed in like here, it would be very hard to take profits this quickly when you are trading. So here to here, let's say we entered, this would be about a 2-to-1 with your stop loss at the break of this candle. However, that's a very quick move and it's going to be hard to enter and exit quickly. Now we would be looking normally for a retest of this purple line for a short. However, I'm going to show you exactly why we don't want to do this. And you'll see these candles got bigger and bigger. These aren't like little candles like what we would normally see here. We got like little price action candles here that had that pop up. Same here. But we're getting some big bullish candles to the upside on the 1 minute. So as you can see, this is exactly why we look at that hourly and those daily marks. And make sure you're not entering here right away because we did have big bullish candle momentum. We usually want to be looking for short price action candles, maybe something like this, or maybe something along the lines of these little candles here or these little candles here. But when it made this big bullish candle move, and if you move to the 5 minute, that looks even different. This is just engulfing the short candle. So this is why we would want to wait to take a trade here, especially since the market opens and during New York session can be extremely volatile. You're going to have these big swings like that, which is great because you hit in and out of trades within 5 to 10 minutes. However, you got to be careful of these swings. So this is exactly why we didn't want to look for a short here, even though it did break that opening range breakout. Once again, the divergence on the hourly indicated that there was no divergence. We were still trending long direction, this upward momentum. So what you could have done, since you didn't see that hourly divergence, is you'll see it hit that zero point 0.5 pretty perfectly with this fair value gap. I honestly probably aim for that 0.618. And what we're next looking for are those take profit levels of 1.272 or 1.618 had you entered there and got in early on that lawn. However, since we didn't get early in on the lawn, it broke to the downside. Now we are more than likely with these big bullish candles looking for a retest or to get in on this purple line here. So I'm gonna go ahead and slow this time frame down. We'll move this to 3x or so. We're going to wait to see if we have little candles here forming. We don't want a big break to the downside. Let's go ahead and play this. So we have more bullish momentum here. So we're either going to try to get in on a fib level or on the purple line here. So let's go ahead. Looks like we're headed downward now for hopefully that 0.5 level. So let's say we want to take it at the 0.5 level, 149.47, and we're going to aim for that 151.91. And I would move to the 5-minute next. We always want to make sure where the heck are we going to put our stop loss at. So we have this big giant fair value gap here. And this is just the fair value gap indicator. If you just type in fair value gap by Lux Algo, it'll pop up. These will probably look even greener now, but you'll see it pops up there. But you'll see we have this big fair value gap here where price is probably likely to head down to either at the 0.618 or the 0.5 level. That matches up really nicely with our 5-minute opening range breakout here. So let's go ahead, put our stop loss just below that fair value gap candle. So this one here, we want to make sure we're not getting stopped out of our trades. I've seen a lot of trades that I've had where it will come all the way to the bottom of this fair value gap and still hold it, even wick right here, but it'll still keep me in the trade. So that's why our stop loss is down there. You'll see we're at a nice 2.22 RR at that 1.272. So let's go ahead and fast forward. As you can see, very scary here. We have wicked right at that fair value gap. Like I was saying, I forgot it did this, but I must have been scared in this trade. I would but I was looking for lawns still this day. The good news is this is a lot of big bullish candles and a lot of big bullish momentum. So we're going to go ahead and stick it in this trade and see what happens. Even though, once again, we did break below, we could see if we break back past above the 0.5 line where I probably already entered at. So we'll go ahead. So we broke past this opening range breakout line. Now, if you wanted to wait to make sure you didn't get a bunch of big bearish candles, you'll see this wicked perfectly down into that opening range breakout on the 5-minute at that 0.5. So now let's say we saw this wick back down into the opening range breakout. We would not have gotten in at that 0.5 had we not put a limit order here already. So maybe we saw it pop back above this opening range breakout again and it wicked down nicely to create this dragonfly doji candle so we can have an indication that we're probably once again looking for longs here. We enter at the 0.618, let's say, because we just saw this candle and we're looking to write it for that 2-to-1, which would be at that 1.618 level. If you wanted to be safe, hit that 1.272. We do have some fair value gaps here and here, but let's go ahead and play out the trade and see what happens. You can also, with these trades, if you wanted to take your order and split it in half on these take profit levels, you'll see our previous day high is right here. Sometimes I like to write it to those levels because I notice a lot during the trading day, I usually gravitate back towards those levels. So I would probably be looking at this 1.618 as a take profit level, but let's go ahead and see what happens. So once again, scary. We hit the 1, but we did not hit our 1.272 take profit level. You see we are now down $265 on a $10,000 account with 10% of our account. So this would be a $1,000 risk trade. We're coming back up now. It's holding this green bullish fair value gap, kind of like I said from the beginning, just holding that area. Coming back down and Mr. 1.272 again. Yeah, I remember last week I hated this trade. It was so scary, but finally hit our 1.272 take profit level. So we are $1,000 up now. We never hit our stop loss. It held this fair value gap. Keep moving. And then finally, I don't think I would have had the patience to wait through this trade. I would have probably been done and out of this 1.272, which is exactly probably what happened to me. But as you can see, it came up and hit that 1.618 eventually. It did take all day, but this is what I'm talking about with these previous day high and low marks on that candle. Usually it likes to gravitate back and forth in between those areas. Eventually, it'll either break one way or the other, and that's what you have to look out for. But you can see it did eventually hit our take profit levels after going back and forth a lot. So that would be trade one, and that's a long position. Once again, why it's a long position, move to that hourly time frame after you mark the previous day high and low. Determine if we have a divergence. We did not have a divergence when we were starting our day. Our day was right here. This was all correct at what? This was around 3 a.m. So 4, 5, 6, 7, 8. So there's no divergence right here. The divergence had already happened back here with this downward movement. So this was already the divergence, and then it popped back up for our long positions because we were in an overall uptrend on the hourly, as you can see here, and it just gravitated back towards that line from that daily mark. So that was trade number one. Now let's take a look at a short to better help you guys out with that. So the second trade is a short, and this actually happened on the same day, except it was during Asia's open. So we took long and shorts this day. So step number one, let's move to the daily time frame, and let's go ahead and mark the previous day high and low candle here. So this one and this one. You'll see this was probably our earlier trade where it just wicked that previous day high. This was our candle where it came all the way down, all the way back up, and now it looks like we're heading possibly for the previous day low again. So as you can see here, we could be looking for shorts, and this is all happening on the same day. So we'll go mark this previous day low. Second step, move to the hourly time frame. And we are going to check if we have any divergences on the hourly time frame. Right now, we are in an uptrend still, so technically I would consider looking for longs during this because I always like to go with the direction of the trend. However, if we do have a divergence on the hourly time frame, I'm probably more than likely going to look for shorts here. So as you can see, we do have a pretty big bearish divergence here. This line here, so all the way across up here, and a double top. We have resistance at the previous day high. So this was the previous day high we marked out. We have a bearish divergence and a double top. So this is all an indication to me that I should probably not go with the direction of the trend here. And we are probably going to be looking for a reversal. So I'm probably looking for shorts tonight, even though we are in a general uptrend. So these are very important details I want you guys to pay attention to when you're trading, because reversals happen, as much as they do as going with the trend when you're trading on the 1 minute and 5 minute and scalping, because you're in and out of trades within 10 minutes to an hour. So because of this double top, because of this bearish divergence, and because we already hit our previous day high and it's just resisting that level continuously, I'm probably going to aim for shorts tonight. So let's drop down to the 5 minute. See what we have here. Ooh, it looks like it's trying to break that previous day high. So we are going to mark, next we're going to mark out from 8:30 p.m. since this is Asia's open to 8:35 p.m. Central. So whatever time zone you're in, please match that with your own, but this is Central time zone for me. So I'll go ahead, fast forward this a little bit. So 8:30, oh, yep, it's that little candle right there. So just this 8:30 to 8:35 candle. We'll go ahead and mark this in purple for the 5 minute opening range breakout. So here's 5 minute ORB opening range breakout. We're going to move down to the minute just to make sure it's lined up better. Lots of resistance at that previous day high level. Kept ranging back and forth, as you can see. Tried to break through and then just started to come back down and now is resisting again. So this is why it's probably a good indication we are looking for shorts here. However, we're going to go ahead and follow the opening range breakout rules, and we're going to wait for a break to the downside here. However, Could you try to get in this early? You certainly could. We could mark this. You'll see it hit that 0.618 pretty perfectly for a possible short to the downside of this 1.272, which is probably where our break's going to land, would be my guess. I don't really remember, but let's go ahead and see. So as you can see, this is where you can get faked out. Once again, I want you guys to watch out for these fake outs. And why are we looking for shorts here? You'll see it did break our opening range breakout, right? It broke this area on the opening range breakout. However, why are we not looking for longs right now here then? And that is because on the hourly time frame, we have a bearish divergence. So I want you guys to always pay attention to this before you trade, because we have this hourly bearish divergence. We can more than likely expect shorts. We have a double top as well, indicating a potential reversal up here, as well as resistance at that previous day high. This is exactly why you got to be careful of these fake outs on the opening range breakout, so you guys can increase your win rates here. I'm showing exactly what I do so I can increase my win rate this year. So we had a bunch of fake outs towards the top. We had 1, we had 2, we had 3. Let's see if this is a 2-to-1 even. It might actually be a 2-to-1, but you would have to enter exactly at that purple line. And your stop loss would probably, gosh, maybe below that candle. No, that's not even a 2-to-1. It'd have to be pretty short. So that is probably not a good trade. Once again, watch these fake outs in the bearish divergence or bullish divergence. But let's go ahead, play it forward. Another fake out, 1, 2, 3, 4. It just cannot get past this previous day high white line that we marked out, as you guys remember. So because there was so much resistance at the previous day high and the opening range breakout, now we have a break to the downside following that bearish divergence we saw in the hourly time frame. So now we do have a break to the downside, so we are looking for a retest into this area here on this purple line. We will actually see if it lines up with one of our fib lines, just drawing this from the bottom to the top. So I would probably be looking for entry at the 0.786 just because it matches up with that purple line nicely, and we have a break to the downside. So we'll go ahead, play it forward. So it hit our entry at the 0.786, and now we have already hit one of our take profit levels pretty quickly at that 1.272. And now we are just moving in the direction of the trend here. I would probably be looking to take profits at this 1.618. Just because we have a lot of resistance around that area and we're already hitting some pretty big fair value gaps off to the left side. So if I hadn't already taken profits at the 1.272, we also have pretty big highlight here at the 1.272, signaling I should probably get out. We will go ahead and play it forward though and see what happens. So did come down, hit our 1.618 for full profit there. We'll see if it goes down any further. Sometimes, like I said, it likes to follow all the way down back to the previous day low. Not all the time, but every once in a while it does do that, even hitting this 2 or 2.272 level mark. So whipped right through the 2 level. Once again, you have to have patience for these trades. A lot of times you're going to get scared around this area because it's going to be going back and forth. But this 2 area, because we had resistance at the previous day high, and our previous day low is all the way down here at this white line that we marked out from the beginning. That is where I would only be looking for profits around the 2 or 2.272. That's typically the farthest I see it go down, and you are scalping, so this can flip on you like that. As you can see, it's going back upward right now, and you would have already been out for a solid trade anyway. Could just range and taper back up now. But anyways, those are the confluences I do look for when trading the opening range breakout. And this is how I make daily income trading this. I don't think there really is a day where I don't trade, but every once in a while you get in ranging territory where it just makes it difficult to trade because we are trading with trends or momentum in the market. As you can see here, I post all my trades under trade ideas using this exact strategy. I give entries, I give take profit levels, what I'm seeing on the graph. If there's something I see on the chart, I try to do a morning trade recap or nightly trade recap just so I can go over the trade with you and you guys as well. I also do daily analysis with the overall current market, long-term trades that I'm thinking about. And I also explain a lot of different other strategies I plan on going over with you guys in my Discord group if you would like to join below. But I just wanted to share with you guys a couple of confluences I really look at so I don't get faked out on the opening range breakout because it can happen a lot, especially if you're just going with the trend. There are plenty of reversals when you're scalping because it flips on you within an instant because you are trading on the 1 minute and 5 minute time frame. So it's important to keep look at higher time frames in order to time those entries and exits better. As you can see, we saw that bearish divergence when we could have went long because the general trend of the direction was up. So we would have probably been looking for longs. However, because of that reversal and that bearish momentum and that divergence we saw in the hourly, we were looking for shorts that day. And it had that resistance at the previous day high. So please take a look at that, follow those step-by-step rules I have laid out for this strategy, and let me know if you have any questions down below. Thanks.